Hey everyone, Bowen from Enhanced Asset Management here, just back with a quick update today on your direct share positions and some updates that these companies have provided the market recently. So we'll start with ResMed, who have released their third quarter results and in which they showed a 7% increase in their revenue up to $1.2 billion. What we were really looking for in this result was some margin expansion, which we've communicated with you over the past 6 months as the main driver of what we think will be some share price appreciation. And they delivered in spades within this result, and we saw a 260 basis points expansion in the gross margin, and this flowed straight down to the bottom line, and we saw a 25% increase in net profit for ResMed. As expected with these results off the back of the update, we saw a pretty strong share price movement, and the stock is up around 15% over the past 2 weeks, which has been a really strong contributor to portfolio performance. The second stock we wanted to run through with you today is AGL. And at the start of the week, AGL updated their earnings guidance for the full year, and in which they increased their net profit after tax figures from 680 million to 780 million, and they increased this range up to 760 million to 810 million. Our forecasts in AGL were relatively conservative, and we based our net profit figures towards the bottom end of the previous guidance, which now obviously we've revalued upwards, and it's created a bit of valuation growth for us as well. Similarly with ResMed, we've seen some really strong share price movement off the back of this update for AGL. The shares were up around 8% on the day of the announcement, and since then they've kept trading higher. And again, similarly with ResMed, they're providing some really strong portfolio performance for us. Finally, we just wanted to run through AUB, who released an update to the market just showing that they were reaffirming their guidance that they previously provided. However, they note that they did expect their net profit to be towards the top end of this guidance. Now, consensus figures were forecasting around $163 million of net profit. Now, with AUB forecasting towards the top end of this guidance range, we expect a 4% earnings revision up towards $170 to $171 million. However, the other really positive piece of news flow for our position in AUB has been a listed insurance broker in Australia, PSC Insurance, announcing that they're set to be acquired by a UK insurance broking platform. So there's only 3 listed insurance brokers on the ASX, and these are PSC, AUB, and Steadfast. PSC have a market cap of around $2 billion, which once they delist, if the proposal goes through, then we'll see a fair bit of flow into the other 2 insurance brokers. Given AUB trades on a multiple of around 19 times of a PE ratio, Steadfast is up towards 21, 22 times. We expect to see a majority of this flow come into AUB, which will further grow the share price. Similarly with ResMed and AGL as well, we've seen some really strong share price reaction off the back of these 2 updates, and again, a really strong contributor to portfolio performance. Finally, I just wanted to run with you our position in Life360. We haven't provided a full update video on Life360 and provided the full information on the company itself and where we see it going, why we like it for the portfolio. This is due to, we've only taken a relatively small position in the company, and we were waiting for another pullback in the share price before we really pushed our holding towards that full weighting, and we were going to provide an update at that point. However, as you can see from the screen here, the share price has kept trending higher, and it's been an extremely positive performer for our portfolio. And we haven't really had that opportunity to build the weighting up as the share price just keeps running. If we do see a pullback, we will look to take additional positions and increase our weighting. However, at the moment, we're happy just letting it run. We will provide an update video with you guys shortly on Life360, just giving an update on what the company does and why we like it, where we see it going in the future. However, for now, we're happy just letting the share price run and letting it build some more portfolio performance for us. As always, this is general information only and is not financial advice. If you do require any further financial advice, please speak with your advisor. I'll be in touch shortly, and I hope you're all doing well. Thank you.